This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. China processed 11% less crude oil in April than a year earlier, with daily throughput falling to the lowest since March 2020 as refiners slashed operations on weaker demand due to widespread COVID-19 lockdowns. Crude throughput last month was 51.81 million tons, equivalent to 12.61 million barrels per day, BPD, data from the National Bureau of Statistics (NBS) showed on Monday. This compared with 13.8 million barrels of oil per day in March and 14.09 million barrels of oil per day in April last year. Processing volumes for the January to April period were down 3.8% on the year at 223.25 million tons, or 13.58 million barrels of oil per day.
EU foreign ministers sought to publicly pressure Hungary on Monday to lift its veto of a proposed oil embargo on Russia, with Lithuania saying the bloc was being held hostage by one member state. The ban on crude imports proposed by the European Commission in early May would be its harshest sanction yet in response to Moscow's February 24 invasion of Ukraine and includes carve-outs for EU states most dependent on Russian oil. Germany, the European Union's biggest economy and a major buyer of Russian energy, said it wanted a deal to authorize the oil embargo, which it suggested could last for years.
Moving on to the top news in the energy sector.
Oil prices were mixed on Monday as investor fears of a global recession spurred by lockdowns in China and weak economic data vied with signs the European Union was stepping closer to an import ban on Russian crude. Brent crude was down 18 cents, or 0.2%, at $111.37 a barrel at 13:42 GMT, while U.S. West Texas Intermediate, WTI, crude rose 2 cents, or less than 0.1%, to $110.51 a barrel. The fall in oil prices is chiefly due to the weak Chinese economic data, as the lockdown measures are having a direct impact on the world's second-largest market, said Barbara Lambrecht, energy analyst at Commerzbank.
Skyrocketing natural gas prices have raised manufacturing and transportation costs across many U.S. industries, and the situation should persist as the United States exports more gas to Europe to make up for Russian supplies lost to sanctions. U.S. natural gas futures have doubled this year, far more than the increases in retail gasoline and diesel that have made Americans angry at the U.S. energy industry and the government. Many industrial company executives believe the United States, once a large importer of natural gas, should stop exporting gas and prioritize its own needs. But gas producers are pushing for more export capacity along with more permits for drilling.
Next, we have the top news in metal markets.
China's crude steel output picked up in April, rising 5.1% from a month earlier as the impact of environmental restrictions and COVID-19 disruptions eased, but it was still well below year-ago levels. The world's biggest steel producer made 92.78 million tons of the metal last month, data from the National Bureau of Statistics (NBS) showed on Monday, up from 88.3 million tons in March and down 5.2% from April 2021. Average daily output in April was 3.09 million tons, according to Reuters' analysis of the NBS data. That compared with 2.85 million tons of daily production in March.
China's aluminium production in April hit a record high, official data showed on Monday, after curbs on power production eased, allowing smelters to expand operations. Primary aluminium output in the world's top producer and consumer of the metal stood at 3.36 million tons, up 0.3% on the same month a year ago, which had been a monthly high, National Bureau of Statistics data showed. On a daily basis, aluminium production last month was 112,000 tons, up from the daily average of 106,453 tons during March, and also a record high, according to Reuters calculations based on the data. We will now look at the top news in the agricultural sector. Any agreements by Egypt's government to purchase Indian wheat will not be affected by an export ban announced by New Delhi, Egypt's supply minister said on Sunday. For India, we are talking with them on the basis of a government agreement. The ban exempts governments including the government of Egypt, Minister Ali Moselhi said at a news conference. Egypt, the world's largest wheat importer, faces a challenge securing wheat after Russia's invasion of Ukraine further inflated high global prices and disrupted relatively cheap Black Sea supplies that Egypt had increasingly relied on.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.